Okay, welcome back everyone to the Boiling Point Podcast. This is episode 33, the stock market flux. And before we get into the episode, we will be talking about GameStop and what happened with them over the last 2 weeks, as well as Robinhood. We're going to be focusing mainly on Robinhood, although some other brokerages were involved with some of the things that happened. But first, before we get into that, I'm sure you're wondering why episode 33 is out of place. And that was because I initially did episode 33 with Pastor Gavin. And then before I even had time to test and make sure everything was good with it, I then did episodes 34 and 35. And it turned out that episode 33 was not salvageable because, as it turns out, all the sound problems I've been having have been from a short in the cord to my microphone, which I have since resolved. So we should be having no more sound problems with that. And if you enjoy this podcast or other episodes of the podcast, please like, comment, and share it out. It'll help with the algorithms of social media and help us reach more people. You can also visit our apparel shop at bonfire.com/store/The Boiling Point Podcast to support us further if you would like to support us beyond just liking, commenting, and sharing. But don't forget to hit that like button. All right, we're going to talk about mainly on Robinhood, but there were some other brokerages that also suspended trading of certain apps, TD Ameritrade, and there were a few others that did suspend trading. But we're going to stay focused mainly on Robinhood on this one. That's what I use. I am a trader. In the interest of transparency, I do not own any. Was not involved with any of the GameStop stock purchases. I did not trust what was going on, and because at any second it could have just dropped back down, you lost all your money. So I was not involved with that. I did purchase some options, some put options for when the price goes back down. We'll cover options in another episode, not in this episode. Trust me, there's going to be enough technical stuff that we're going to be talking about on this one. Okay, so the big one is GameStop. That was suspended. Robinhood also at various times had AMC Entertainment suspended, BlackBerry Limited, Express, Costco, Bed Bath & Beyond. And there were a few others, I believe, that were temporarily suspended, either for a day or maybe just for a few hours. We're going to be mainly talking about GameStop. The same thing happened with all the stocks, really, but it was obviously most with the GameStop. When a stock goes up 3,000% over a week, that's obviously something that doesn't happen. The other stocks that I mentioned did also see an increased volume, but nothing like what GameStop experienced. So that's why we're just going to talk about GameStop. Now, we're going to talk about at the beginning of the story because there's lots of people out there reporting the story. There's lots of different points of views out there. I've seen them. I watch CNBC almost every day when the market's open so that I can continue to learn and make smart trades. Because I am a Robinhooder, as CNBC likes to call us. But we're going to address CNBC in the Rumble portion. We're not going to talk about them right now. But we are going to go to the beginning of the story, which most mainstream media and even a lot of independent outlets really aren't focusing on. And that's the very beginning of the story, and that is Melvin Capital, a hedge fund. I'm not sure if there were other ones involved. I can confirm Melvin Capital began shorting GameStop. Okay, they shorted GameStop 125%. Now, that's the first, if you're wondering, how do you do that? Well, that's something that should be probably looked into. It is legal, but at this time, but maybe it shouldn't be. Shorting more than 125% of a stock is quite ridiculous. Now, let's talk about what a short is, okay? So what did Melvin Capital do with this short? What is a short? All right? So, before this all happened, GameStop was trading right around $12. So, for the sake of this conversation and me explaining what a short is, let's just say that GameStop was at $12, okay? GameStop is at $12. Melvin Capital borrowed shares, 125% of the shares, and then they sold it for, let's say, just for the sake of this conversation, $10 a share. The current price is at $12. They sold 125% of the shares at $10 a share. Okay? Now, what they were hoping for was that GameStop would drop down, okay? And then in order to repay those shares, they would buy them back at, let's say, $8 a share. Okay? So, they buy them back at $8 a share, return the 125% of the shares that they borrowed, and they make a profit because they sold them at 10, rebought them at $8. Okay, so that's what a short is, when you sell it for less than the current price. The object being that it drops below what you sold them for, so that you can rebuy the shares that you borrowed and give them back to the broker. Now, after that, of course, we all know Reddit got involved, and we're going to cover that later. Shot the price up, and Melvin Capital lost hundreds of millions of dollars because they had to rebuy those shares at an increased cost, not for a less cost. That's how they lost money, because they had to repay those shares. They borrowed them, you have to repay them. So, now let's go to Robinhood for a minute. They had 3 statements. I have the links up in the description. I'm not going to go over all 3 of these statements. I just think you can go and read them for yourself, and a lot of it is going to be the same information, just respouted different ways. So I don't think that we need to do that. What I do think we need to do is we're going to just cover one of these, and that's the January 29th release on their blog. I have links to all 3 of these statements. You can check them out for yourself, and I encourage you to check them out for yourselves. Now, as you can see here, we're just going to go over this whole statement. I'm just going to go over this whole statement with everybody, and then we're going to talk about it as we go through it. All right. So, with the extraordinary market activity this week and the temporary restrictions we put in place on certain securities, meaning stocks and options, we received questions about how Robinhood works, trading, clearing, and settlement and clearing houses. And here's an overview of the mechanics or the plumbing behind your trades. Let's dive in. So, settling trades. When you buy or sell a stock, Robinhood sends your orders to market makers that execute your trades. Market makers send a record of the trade to Robinhood Securities, which works with a clearinghouse to record the trade. It takes 2 days for the clearinghouse to transfer the stock to the buyer and funds to the seller. This is known as clearance and settlement. In other words, everyone getting what they agreed to when the trade executed. In the industry, this is referred to as the trade date plus 2 days to settle, or T plus 2. Now, let's talk about that for a second. Now, what they're saying is when you buy or sell a stock on Robinhood, or let's say you bought GameStop, okay? You bought GameStop, and on your screen, or through the Robinhood software, you see that it happens instantaneously. You instantly own that stock. It's in your list. You can track it. You can sell it whenever you would like. But it's not instant. It's not actually instantaneous. They're saying that it takes 2 days to actually complete your trade. Okay. So when you're buying and selling, if you're buying and selling multiple things a day, their capital is actually what's getting used in the interim until the sale actually the sale of the agreement goes through 2 days later, which is the T plus 2 that they're talking about. Okay. All right, we're going to continue the statement here. Meet your clearinghouse. Clearinghouses are SEC-registered organizations that act as the central depository for securities. They keep a record of the stocks owned through a brokerage. Clearing brokerages like Robinhood Securities are members of clearinghouses. These clearinghouses have membership rules approved by the SEC that govern the activity of their members. Clearinghouses establish financial requirements for members, including deposit requirements designed to reduce risk to the clearinghouse. Okay, so what they're saying there is that the SEC, okay, has rules for how these clearinghouses established, and Robinhood Securities are members of these clearinghouses. Okay, clearinghousing requirements: to clear and settle customer transactions each trading day by 10 a.m. Eastern. Clearing brokers like Robinhood Securities have to meet those deposit requirements to support their customer trades between the trade date and the date the trade settles. We withdraw money on some days and deposit money on other days depending on that day's requirement, okay? So again, that goes back to the T plus 2, where it takes money, it takes time to take the money out of your account and give it to the party that you bought the stock from. and it takes time to actually get the stock that you've purchased. Or the other way around, if you're the seller, okay? It takes 2 days when you make a trade for it to actually go through. All right, how do clearinghouses determine how much is required? It's pretty technical, but the process basically works as follows. Clearinghouses look at a firm's customer holdings as a portfolio. They use a volatility multiplier, looking at specific stocks to quantify their risk. The clearinghouse may assign significant additional charges based on how much of one stock a firm's customers hold. If a firm's customers have more buy than sell orders, then the securities they're buying are more volatile. The deposit requirement will be higher. Clearinghouses can also require additional deposits if certain thresholds are met. All right, now let's go here to the last segment here. What happened this week? The amount required by clearinghouses to cover the settlement period of some securities rose tremendously this week. How much? To put it in perspective, this week alone, our clearinghouse mandated deposit requirements related to equities increased tenfold. And that's what led us to put temporary buying restrictions in place on a small number of securities, meaning stocks or options, that the clearinghouses had raised their deposit requirements on. Because the stock got more volatile. So, for example, the GameStop, because it got more volatile because of the increase it was having and the amount of people buying it, it became more volatile. They were required to have more capital than the trades that were even happening, which was hundreds or thousands even. Like I said, people buying and selling and buying and selling. So the amount of money that they needed to have on was increased. Okay. Now the statement goes on, and we're going to finish this whole statement. It was not because we wanted to stop people from buying these stocks. We did this because the required amount we had to deposit with the clearinghouse was so large, with individual volatile securities accounting for hundreds of millions of dollars in deposit requirements, that we had to take steps to limit buying in those volatile securities to ensure we could comfortably meet our requirements. Our goal is to enable purchasing for all securities on our platform. This is a dynamic, volatile market, and we have and may continue to take action to make sure we meet our requirements as a broker so we can continue to serve our customers for the long term. Now, at least the first time they suspended trading to some of the stocks that we already mentioned, okay? Let's assume that this statement is 100% accurate, 100% true, that's really what happened. It's completely reasonable to believe that because Robinhood's popularity and the amount of users has been increasing very much over the last 18 months. Even since I got in with Robinhood, since I started trading, the number of users has just been enormous. So they've had to increase their capital anyway. Now, with what was happening with GameStop, the amount of volume that was being traded on GameStop, and to put it a little bit in perspective, some of the days GameStop had more traffic, and when I say traffic, I mean people buying or selling, volume, okay? People buying or selling stock. It had more volume in a single day than it did the entire previous year. Okay, so we're talking about millions, hundreds of millions of trades that happened. And they are required by the SEC to have so much capital in place, and with the volatility multiplier, that could be a very high number. In addition, Robinhood did also get a huge influx of cash from their investors. I believe it was $1.4 billion was infused into their capital from their investors. And then they released a number of the suspensions that they had on certain stocks and options. Of course, then a couple of other times they did do it. Now, you can believe, at least the first time, with the statement and everything that was happening and the amount of volume that was being traded on GameStop and the amount of users that Robinhood has, new users that Robinhood has been having come in, even over the last 6 months. I believe that the statement reads reasonable. I believe that statement is reasonable. They had to suspend because they would have been in violation of SEC rules, and that could have closed them down permanently. So they did suspend trading on certain ones. Now, why did they continue to do it, or why did they do it afterwards, even after receiving a huge influx of cash from their investors? GameStop did remain volatile. There were still all week, even for the last 2 weeks, anytime these platforms have not had has not had GameStop suspended, it has been being traded. The volume is just remarkable. So whether you believe that they've still reached this cap, that they still don't have enough money and that's why they have to suspend, I'm not sure about that. But at least the first statement, the first time they did it, that to me rings true. Because, like I said, the volume that was happening on GameStop was just completely ridiculous. Okay, so we're going to continue the episode, but we are going to continue the episode on Rumble. So you should tune in. You should go over to Rumble. If you're watching on YouTube, go over to Rumble right now. Search the Boiling Point Podcast. You can find our station. Sign up for Rumble. It's no different than signing up for YouTube. If you sign up for YouTube, you can sign up for Rumble. It's no different. You can subscribe that way. Also, you can like. Please comment. You can also share. You can share it on Facebook. You can also find us on Facebook at facebook.com/The Boiling Point Podcast. You can follow me on Instagram at JDE Poster Designs. That's with a Z. And you can also visit our storefront, bonfire.com/store/The Boiling Point Podcast. Buy some apparel, some new apparel. Also, we have a reusable tote bag with the American flag and the Boiling Point Podcast on it. You can also buy one of them. Switch over to Rumble right now. We're going to talk about Reddit and what the retail investors and possibly other hedge funds were involved in, and how they hurt Melvin Capital and how they did it and what that means. And we're also going to talk about CNBC's gross, terrible coverage of everything that has been going on with GameStop. And we're also, at the end, we'll also be covering what I think, maybe should or should not be happening in the marketplace because of the fallout of what has transpired. So switch over to Rumble right now, and if you are watching on Rumble, then just wait a few seconds, and we'll be right back.